Hello and welcome to Explain the Charts, your go-to channel for no-nonsense technical analysis. Today is September 29th, 2025, and we are breaking down the chart for one of the most watched stocks in the world, Apple, ticker symbol Apple. The news cycle for Apple has been a roller coaster lately, and it's having a massive impact on the stock price. So first we'll cover the headlines, and then we'll see how it all plays out on the charts. The main story revolves around the iPhone 17 launch. Initially, after the September 9th event, Wall Street seemed underwhelmed, viewing the upgrades as merely incremental, which caused a brief dip in the stock. However, that narrative quickly flipped over the past 10 days. We've seen a flood of bullish news, with reports of incredibly strong pre-order demand and extended shipping times for the new models, which the market interprets as a sign of a potential sales supercycle. This has been backed by reports that Apple has increased production orders for its base iPhone 17 model. Analysts have jumped on board this bullish sentiment, with Wedbush notably raising its price target to a staggering $310, citing a pent-up upgrade cycle and the future potential of AI monetization. Of course, there are some counterpoints to consider, such as margin concerns if cheaper models dominate sales and ongoing competition in key markets like China. So, with that mix of news, let's turn to the charts to see what the price action is telling us. Looking at the daily chart, we can see a perfect reflection of this news cycle right here in September. Following the September 9th event, we saw the stock pull back from around the $238 level, falling to test support near $226 as the market digested the incremental upgrade narrative. But then, beginning around September 19th, the sentiment changed dramatically. The stock exploded higher, culminating in a significant gap up on September 22nd, as it surged from the low $240s to over $256. This was the market aggressively pricing in the news of strong iPhone demand and the bullish analyst ratings. Now, let's zoom back out to get the bigger picture. The dominant long-term trend this year has been undeniably bullish, especially since the major capitulation and reversal we saw in early April when the stock bottomed out near $170. After that low, Apple began a powerful rally through the spring and summer, peaking in mid-July around the $237 mark. We saw a sharp, high-volume gap down in early August, but the price showed incredible resilience, finding buyers and quickly reclaiming those losses. This recent September surge has now broken the stock out of that summer trading range, pushing it right up against its 52-week high of $260.10, which was set back in December of 2024. This makes the $260 level the most critical overhead resistance to watch. If the price can break and hold above it, we enter price discovery territory. On the downside, we have our first level of minor support in the $251 to $253 range, where the stock has been consolidating for the past few days. Below that, the top of the September 19th breakout gap, around $246, serves as the next key support level. A more significant support zone sits around $240, which was the resistance level before this most recent leg up. To get a better feel for the short-term battle, let's switch to the 1-hour chart. Here, we can clearly see the price action of the last week. After the massive push to the $257 area on September 22nd, Apple has been consolidating sideways. The price is building a tight range, roughly between $252 on the low end and $257 on the high end. This coiling pattern is typical after a strong impulsive move, as buyers and sellers reach a temporary equilibrium. A breakout is likely coming. A sustained move above the recent high of $257.60 would signal a continuation of the uptrend and a likely test of the all-time high at $260. Conversely, a breakdown below the $252 support would suggest short-term weakness and could lead to a test of that $246 gap fill level we identified on the daily chart. For those looking at even shorter time frames, the 15-minute chart shows this consolidation in greater detail. You can see the choppy, range-bound action over the last few sessions, particularly on September 26th. Notice how volume has generally decreased during this period of consolidation. This is constructive, as it suggests there isn't heavy selling pressure. For day traders, attempting to trade within this tight chop is risky. The smarter play is to wait for a confirmed breakout from the larger hourly range, accompanied by a significant increase in volume to validate the move's strength. So, let's bring it all together and recap the outlook for Apple. The bullish case is currently very strong. The fundamental narrative of an iPhone supercycle is driving the price, and the technical picture confirms this with a powerful breakout and strong momentum. If bulls can push the price decisively through the all-time high resistance at $260.10, there's very little to stop a move towards the next psychological levels, like $270 or even higher analyst targets in the longer term. I would place the likelihood of this scenario at around 65%, contingent on the broader market remaining stable and iPhone sales data continuing to be positive. The bearish case hinges on a failure at this major resistance level. The stock has had a huge run, and it's vulnerable to profit-taking, especially if any negative macroeconomic news emerges. If sellers take control and push the price back below the $252 support level, a pullback to retest the breakout point around $246 becomes highly probable. A break of that level would be a more serious warning sign for bulls. I see this bearish scenario as having about a 35% chance in the short term. To summarize the key levels, your major resistance is the all-time high around $260. Your primary support zone is $251 to $253, followed by a more significant level at $246. Looking ahead, continue to watch news reports on iPhone 17 sales figures and product mix, as this narrative is currently steering the ship. And pay close attention to the volume. A high-volume break of $260 would be a very powerful bullish signal. That's our analysis for today. Remember, this is not financial advice, so please do your own research. If you found this breakdown helpful, please hit the like button and subscribe to Explain the Charts for more in-depth chart analysis. Thanks for watching, and we'll see you next time.